Let's get a fixed income market update with Nwabueze Okonne. He's a trader at UBA and he's standing by. Well, Izzy, it's great to have you on our show. And a few things I want us to run through today. The first thing, of course, is the results of the central bank's auction of foreign exchange today. We saw that they offered $150 million. They provided everything that they offered. But of course, this is lower than the $234 million offered on Monday, when it seems that there was significant pressure on the Naira. Today, we've seen more pressure on the Naira. So talk us through your thoughts on what is going on.
Well, like you said, offering 150 in the market today as against 250 offered on Monday. I guess the thought behind it is more like the fact that as of Monday they offered 250, market took up 234. Now on today's auction, 150 taken up, rates still stable. So at the CBN window, it looks all well and good. Interbank window is still in a different picture.
Right.
We're seeing Naira weakening from the opening of this morning or closing of yesterday. Naira losing about 50-60 kobo, closing at 158 even. I think the next auction you'll see the CBN respond appropriately. I don't doubt that they have enough arsenal in their war chest to respond or to defend the currency if need be. But overall, I think that the wide range and the corridor that we expect on the currency, we shouldn't forget that we're expecting a corridor of plus or minus 3% on 115. That corridor is nowhere near being breached currently, so I don't think that whatever happens in the Naira now, it's outside of the expected range and would definitely would begin to cause a lot of worries for them. I don't think so.
Okay, so nothing much to worry about. I think that's what you're saying. But how weak do you think it could go, though? I guess it's all a question of how much the central bank offers to the market. So the other day they offered over $200 million. Today it's down to 150. Yeah. I guess they are reading the market and offering what they think is appropriate.
I think like you said, I think they will always respond in an appropriate manner. I have no doubt about that. But overall, it's all a function of demand and supply. Demand inflows outside of the CBN window tend to be thinning out a bit. But I think it's more like upticking demand coming in fully into the market right now. The kind of pricing. Price compression that we used to have between the CBN window and the interbank market actually opening up a bit. That's causing a lot of demand effect being felt into the market. That we see. I think you get steady flow of supply into the market outside of the CBN window. I think that compression will come in again. But until that happens, I think the Naira will be on a weakening trail. Albeit not in a sharp moves, but overall we'll see some weakening into the next few weeks.
Okay, let's shift focus to the bond market. And I had a conversation with the CEO of the Asset Management Corporation of Nigeria earlier today. He did indicate that they are looking to appoint market makers to drive the liquidity of the AMCON bonds. What I hear, though, is that the AMCON bonds are already trading to some extent. Talk us through the impact that you anticipate if the AMCON bonds really get integrated into the bond market today.
Well, I mean, it's going to be a plus to the market. The AMCON has got its features. I think most people would almost put it almost at par. Definitely, it's not at par with the FGNs, but most people almost put it at those levels. Yeah, there are a couple of OTC over-the-counter trades happening on the AMCON bonds. Not really something in terms of market making. I think putting the market makers in place would actually help the market. It would give a price discovery quite easy access. It will make add more depth to the fixed income market. I think overall, if you look at where the current yields are across the curve for the fixed income market, the AMCON bonds actually just provide some good opportunity for people to want to go into it. I think it would generally add a bit of color, excitement, and a bit of liquidity more into the market.
But how do you think those bonds will be priced, though? Yes, it seems like they are pretty much federal government bonds because they are guaranteed by the federal government. Yeah. So, do you think that with the market making structure put in place, they would actually trade at par with federal government bonds with similar tenors?
I do not expect anything different. In fact, I mean, if I look at the current market, anything that really comes out into the market, except that instrument really has a lot of risks tied into it, most people begin to price it off the equivalent tenors in the FGNs. Now, with something that has a federal government guarantee, I think the risks on that is much limited. And as usual, I don't think it will try to trade off any different from where the FGNs